Hey folks, I'm just busy recording my swing trading blueprint videos, so I'm taking a 2-minute gap to post up a natural gas trade update for you. The market's moved a little bit, but not much, a little bit of a gap over the weekend. Let's look at the spot price here at Pepperstone first. And there's the little weekend gap, just a little rollover, and we opened up at just above $2 really. Look at the 20-period moving average curling up beautifully underneath us on this 4-hour chart. And we're above the 50, we're also above this channel line that we've been talking about for quite some time now. So looking quite constructive, but this big area at the top here, 2.25 remains the big barrier to this moving higher, and probably best looked at on the day chart. So there's that channel. We've been in and out of it a few times, so it's not really a very clean channel. But what I do like is that we traded within it and then dropped below it and then traded beneath it for quite a long time and respected that line. When we broke up above it, we respected it again on the retest. Now we've broken up above the top of the channel. Let's see if we can hold that today. Now, this is the spot price at Pepperstone. Note that we're trading at 2.05, whereas on the Henry Hub futures, we're trading at, call it 2.2. So we've still got about a 15-cent catch-up. And as long as these futures keep moving up, the spot price should follow suit. So it's all looking a bit messy. But if we switch this to the day chart on the Henry Hub, there's our old familiar chart again. There's the triple bottom, the revisit to the 786, my funny squiggly line. That's where we retested. Didn't quite close the gap again, actually. And then gapped up, actually, at the rollover and still moving higher. This is the day chart on the NYMEX Henry Hub. Look what's above us, though, 2.25. We've tried that twice now and failed 2 times. We've also got the 50, the 100, and the 200 moving averages piled up above us at the same level, 2.25. Until we get a daily close above there, this remains kind of sideways to slightly weak, actually. So we've got to see a push up above 2.25, a daily close above there, and then we should be away. Now let's go to have a look at the weekly chart. We looked at this in the last video. Got this beautiful double bottom. We talked about natural gas respecting double and triple bottoms all the time. There's a triple, just for example. There's another double on the top left-hand side. And here's the most recent double, 4 weeks ago and last week. Big double bottom, last week fractionally lower, maybe by, I don't know, 1 cent or something, but forming this tweezer bottom. I think if you put this on the monthly chart, you'd probably see a tweezer bottom. Let's check this out of interest. And yeah, so no tweezer bottom because we didn't get 2 equal lows or similar lows, but a little bit of a doji hesitation candle here on the monthly chart. So that's not telling us a lot, but the weekly chart does look good. This double bottom, tweezer bottom, I suppose, weekly tweezer bottom, although it's separated by a couple of weeks, and a bullish engulfing candle last week makes this all look pretty good. Let's go back to the day chart. And there we go, trading at 2.2, 2.195 on the NYMEX. And having a look at the spot price at Pepperstone, very similar sort of picture. What's interesting on this chart actually is that this double bottom, which I pointed out a few weeks ago, is very, very similar in structure and nature to the previous one. So like a tri-star bottom, if you like candles and you know candles, the tri-star formation, it's not quite there, but it's similar. The star candle in the middle is a doji, not a star, but very similar to this recent occasion. We had that slightly bearish candle, a doji hesitation candle, and then this bullish reversal candle a couple of days ago. Almost identical to this previous occasion and at the same level. So for my money, natural gas is looking pretty bullish. I'm happy with the way it's looking. My target is 2.25. We've got to get through there. And until we do that, we're going to be languishing under that level. It's a really key and important level now, but it's also where these moving averages are. So we want to have a close above there on a daily and a weekly basis in order for this to move up to $3 and then $3, 40, 50, 60, or 75 with a bit of luck later in the year. Well, I hope you enjoyed that. Please subscribe to the channel if you enjoy this sort of thing. Give us a thumbs up and make sure you put your name on the early bird list. The link's directly below this video for the Swing Trading Blueprint, and that course opens on the 14th of September this year. A couple of weeks' time. See you there.